Chapter 5. Deposits. Question 2. Explain the following terms or concepts. 2 marks each. 1. Eligible public company. Answer. Eligible public company means a company having a. A net worth of not less than rupees 100 crores or b. Turnover of not less than rupees 500 crores. An eligible public company can accept deposits from its members and from the public. In case of deposits from the members, it cannot accept fresh deposits if the amount of such deposits, together with the amount of previous deposits, exceeds 10% of the aggregate of its paid-up share capital and free reserves. In case of deposits from public, it cannot accept fresh deposits if the amount of such deposits, together with the amount of previous deposits, exceeds 25% of the aggregate of its paid-up share capital and free reserves. 2. Tenure of deposit. Answer. Tenure of deposit means the minimum and maximum period for which a company can accept deposit. A company is not allowed to accept or renew deposit which is to be repaid within a period of 6 months or more than 36 months. However, a company may accept short-term deposits which are repayable earlier than 6 months for the purpose of meeting any of its short-term requirements, provided a. Such deposits have a tenure of minimum 3 months, and b. Such deposits shall not exceed 10% of the aggregate of the paid-up share capital and free reserves of the company. 3. Secured deposit. Answer. Secured deposits are deposits which are secured by way of a charge on the assets of the company. If the company fails to repay such deposit and interest thereon, on maturity, the assets so charged will be sold, and the amount will be paid to the depositors. A company is allowed to accept secured or unsecured deposit. This has to be clearly mentioned in the circular or advertising inviting deposits. In case of secured deposits, it has to create a charge on its tangible assets within 30 days of acceptance of deposits. The charge has to be created in favor of the deposit trustees. 4. Deposit trustee. Answer. Eligible companies and public companies are required to appoint one or more deposit trustees while inviting secured deposits. The deposit trustees are appointed to protect the interest of the depositors in case the company defaults in repayment of deposits or interest on deposits. Company signs a contract with the deposit trustees, called as trust deed, containing the terms and conditions of the contract. This deed has to be signed at least 7 days before issue of circular or advertisement. 5. Charge on tangible assets. Answer. A company is allowed to accept secured or unsecured deposit. In case of secured deposit, the company has to create a charge on its tangible assets for an amount not less than the amount of deposit accepted within 30 days of acceptance. This charge has to be created in favor of the deposit trustees. The deposit trustees are appointed to protect the interest of the depositors in case the company defaults in repayment of deposits or interest on deposits. When a company defaults in repayment of deposits, the deposit trustees can call a meeting of all depositors, either on its own or on the request of 1/10 of depositors. 6. Deposit insurance. Answer. When an eligible public company accepts deposits from public, it has to take deposit insurance if the amount of deposit plus interest thereon is up to rupees 20,000. Company has to take this deposit insurance 30 days before the issue of circular or advertisement. For this, company enters into an agreement with an insurance company for taking deposit insurance. 7. Deposit Repayment Reserve Account. Answer. Every company accepting deposit has to open a deposit repayment reserve account in a scheduled bank. On or before 30th April every year, company has to deposit an amount not less than 15% of the amount of deposits maturing during the current year and following financial year. The amount lying in this account can be used only for repayment of deposit. 8. Credit rating. Answer. Credit rating is a measurement of a company's ability to repay a financial obligation based on income and past repayment histories. It is done by analyzing a company's net worth, assets, liabilities, its liquidity, repayment capacities, etc. Company accepting deposits has to get credit rating of its deposits, and the same has to be included in the circular or advertisement. The credit rating agency gives a credit rating after considering the net worth of the company, liquidity position, ability to repay deposits on time, etc. Credit rating has to be obtained every year during the period of the deposits. 9. Deposit receipt. Answer. Every company accepting deposits has to issue deposit receipt to the depositors within 21 days from the date of receipt of money or realization of check. The receipt has to be signed by an officer duly authorized by the board of directors. The deposit receipt gives details of the name and address of the depositor, amount of deposit, rate of interest payable, and the date of maturity. 10. Return of deposit. Answer. Return of deposit means submitting the details of the deposits accepted by the company to the registrar of company in prescribed format. This format contains details like name of the depositor, amount of deposit, tenure of deposit, date of maturity, etc. Company has to file with the registrar of companies a return of deposit for the period ending 31st March of the financial year. The return of deposits must be filed on or before 30th June every year.